Oh, firing J Powell. This is going to be a good one, and you're going to want to pay attention to this one. I do want to give you a quick heads up that this morning I gave a totally free heads up that you want to pay attention to Coin and Robinhood. Here it is. I sent this to people. I texted it to you. I emailed it to you. I talked about Hood going to 29.81 and Coin breaking 244 if we get a bullish open on the NASDAQ. That's what I wrote in my alpha report. And look at what happened. Robinhood traded sideways for about the first 30 minutes and then skyrocketed from 27 over 20% right to my line. And Coinbase, it didn't go from my 218 line to my 244 line the way I thought it would. It went over it, and it only started trending back to it in after hours. So if you want to get alerts like that, make sure you go to meetkevin.com/alpha. It's the first free report we did yesterday, well, actually today, and I'm going to do another one tomorrow. So stay tuned, get your alpha. Go to meetkevin.com/alpha to sign up. It's free. CNN is freaking out that the Federal Reserve might get destroyed by Donald Trump. In fact, they say exactly that in their article entitled "The Federal Reserve as We Know It Could Soon Be Turned on Its Head." This was published today, and it pictures a sad photo of Jerome Powell. Now, we'll go into the details of what they're concerned about and how Donald Trump could fire Jerome Powell, or if he does, what that could mean for Federal Reserve independence. But what we've got to analyze first is it even possible for Donald Trump to fire Jerome Powell? After we ask, is it possible, then we have to ask ourselves, okay, well, whom and why would there be a replacement? So with whom would Jerome Powell get replaced, and why would there be a replacement? And then we'll have to evaluate, what does CNN actually have in terms of a concern, and is there any valid basis for this? So let's start. Is it possible for Donald Trump to fire Jerome Powell? Well, as somebody who studies the Fed, and probably more than Nick T does, although I'll give respect to Nick T, he basically says we're getting a 25 basis point cut tomorrow. It is worth noting that the Federal Reserve Act does allow a president to remove a Fed governor for cause. Now keep this in mind, there are 7 Fed governors, one of them sits on the chair of the Board of Governors, and there are 12 more bank presidents. So in total, you usually have a total board with governors and presidents of about 19. But let's understand this for a moment. If a president is allowed to remove somebody like Jerome Powell for cause, how is cause defined? Well, actually, pretty dang broadly. And we know anything that's defined pretty dang broadly is subject to Donald Trump's interpretation, and we know that Donald Trump is going to interpret it to mean whatever the hell he wants. For cause is generally regulated as some form of inefficiency in governance, neglect of duty, or malfeasance. Well, inefficiency, frankly, you can make plenty of arguments about the inefficiencies of monetary policy, especially if the country ends up entering into a slower jobs growth environment, which that alone could argue for either a recession or replacing Jerome Powell. After all, the Federal Reserve has a dual mandate: stable prices and maximum employment. And if employment is going negative, then you could argue the Fed is either being inefficient or they're doing something wrong, which would be malfeasance, or just straight up neglect. Quite frankly, you could just allege all 3 of those, fire Jerome Powell, pick somebody else, and by the time it gets litigated in courts, which tend to now broadly side with Donald Trump, well, let's just say you're going to end up with a different Fed president. So is it possible? Absolutely. Now, is it likely, and with whom would Donald Trump replace Jerome Powell? Well, I think whether or not it's likely depends on what kind of economy Donald Trump inherits. Nick T talked about exactly this earlier today on Fox Business. Now, I'll save you the 7-minute video because while he basically said we're getting a 25 BP cut tomorrow, quarter percentage point cut, and we'll get a lot of wait and see, Nick T was very reasonable to point out that, hey, we don't exactly know what kind of economy we're going to get under Donald Trump because some of it is out of Donald Trump's control. We have expectations about tax policy and tariff policies and potentially inflation or rates, But that doesn't necessarily mean that our expectations are going to align with reality. In fact, frequently, the opposite happens. So let's think for a moment. If Donald Trump, as Nick T says, inherits a productivity boom and GDP continues to grow, well, we might actually be able to pay off our debt or reduce our debt expenditures as a percentage of GDP, and we could go into a relatively positive period of economic growth, which is generally good for everyone. If, however, Donald Trump inherits a more recessionary economy, which is possible by January, February when he takes over, it is entirely possible that Jerome Powell is going to find himself stuck between a rock and a hard place. Do we cut faster? Do we go to 3%? Do we go to 2%? 1%? Do we go to 0%? And we can all anticipate that Donald Trump is going to demand 0%. But not only is Donald Trump going to demand 0%, he's going to demand exactly what Rick Santoli from CNBC was freaking out about this morning when he was interviewing a volatility trader over at the Commodities and Futures Trading Commission. And Rick Santoli's like, wait, what do you think the Fed's going to do? And the guy's like, QE. We're going to go back to QE. That's quantitative easing. And Rick was freaking out over this. He's not a big fan of the Federal Reserve's manipulation in markets. But this is not just going to be about interest rates coming down. Donald Trump has the potential to say, look, Powell, you're fired unless you get rates down rapidly and you turn the money printer back on. Money printer go burr. Now, in order to actually get to that kind of pressure, you're probably going to have problems in markets, some form of instability. Like when stock markets are at all-time highs, I don't see Donald Trump picking up the phone and going, hey, I need you to go to 0. Powell's going to be like, well, first of all, why are you on the camera app? And second of all, why? Now, if markets are in turmoil, then it's entirely possible that Jerome Powell picks up the phone and goes, what are you doing? Get to work here, otherwise you're fired. And it could enhance the Federal Reserve's desire to actually make some change happen. After all, Jerome Powell, while he says he wants to be apolitical, that is not influenced by politics, he also has a legacy to protect. And being the first Federal Reserve chairperson to get fired would look really bad for Jerome Powell. Now, he might not care, but he also doesn't want a recession. I truly do believe Jerome Powell cares about, quite frankly, the success of America. And if they can avoid a recession, they will. Now, they will put us through a recession if they think there's a risk of inflation coming back. They'll rather have a recession than inflation, but that's really a debate for a different video. What's more important is if inflation is down, which I expect it to continue to be, and we have tumult in the market, I absolutely expect Donald Trump to pressure Powell. Powell's term does not technically end until May of 2026. That technically means Jerome Powell has another year and a half, about 18 months of his term to go. This is actually quite interesting because it means, you could get fired at any point next year unless you do Donald Trump's bidding. Now, with whom would Donald Trump replace Jerome Powell? This might mean less, but it could be really anyone. You could have Kevin Hassett. You remember him. He used to be on TV all the time during COVID and during the V-shaped recovery Larry Kudlow days. He was the former chair of the Council of Economic Advisors under Trump. And he's really a tax policy expert. He worked a lot with the Tax Cut and Jobs Act. Another option would be Art Laffer. Though Art Laffer has kind of suggested he doesn't want the job, Art Laffer would make Kathy Wood's life. Kathy Wood loves Art Laffer, really respects him. He's somebody who was part of the Reagan administration. He was a strong advocate for tax cuts, which a lot of people, especially Trump supporters, big fan of tax cuts. I think that's probably also in part why he got elected. And he's a big fan of using tax cuts to stimulate growth. Could he end up working at the Fed? Yes. But he's indicated he doesn't really want a life of that sort of public eye. So he might say no, but who knows? Maybe he'll end up being some form of advisor, or they'll just find somebody who's sort of like Art Laffer. Another opportunity could be Lori Logan, who already works at the Federal Reserve, or maybe somebody like Kevin Warsh. This is just another former Fed governor from the Bernanke days. He's got some critical views on QE, though, so it's possible that you don't end up getting Kevin Warsh. And Lori Logan might be a little bit more concerned about inflation. So you're probably going to be looking more at someone like a Kevin Hassett. I personally wouldn't be surprised by that because I'm not trying to sound offensive to Kevin Hassett. Maybe I have the wrong impression here. But I kind of feel like Hassett is somebody who's just going to kind of do whatever Donald Trump wants. And that's going to give Donald Trump significant power over monetary policy. And frankly, in the short term, it's probably a good thing. The Federal Reserve in the short term is probably too restrictive in terms of their policy for what we should deserve, quite frankly, with an economy that's slowing. The jobs market, there is no question, is unmistakably slowing down. There are inventory channel corrections at corporations, pricing power is waning, and yeah, that doesn't mean companies can't beat earnings expectations. Earnings expectations were revised down, so it's easier to beat. That's sort of how analysts pre-price earnings. They revise down and then they beat. It's all a game. And the analysts kind of benefit anyway when these stocks go up, in my opinion, because that's how they keep their jobs. You keep pooping on companies too much, you end up getting fired. Nobody likes a bear, let's put it that way. But what's really interesting here is, in the short term, bullying the Federal Reserve to lower rates could help reduce the impact of a recession and could be the right thing to do. However, there are some serious long-term concerns, and this is what CNN is freaking out about. Before I mention that, I do just want to quickly mention tomorrow will be the second day that I provide a free alpha report. Go to meetkevin.com/alpha. This is going to be our second report tomorrow. I try to get it to you about 15 minutes before the market opens. It comes to you with trade ideas and options to watch, technical analysis to watch. So if you want to get that report, make sure to get it over at meetkevin.com/alpha. So with that, let's jump in over here to CNN. For over 70 years, the central bank has operated as an independent, it's basically a quasi-government agency. When officials meet to decide interest rates, they don't consult the president. And that's because the central bankers should be essentially there to remove the punch bowl right when the party's getting started, or to make just frankly unpopular decisions. Like the party was getting started in 21 and then the Fed starts U-turning in December of 2021 and they take the punch bowl away. That's unpopular. Now in this case, Federal Reserve support would actually be very popular because people want lower rates. The problem is when you remove that Federal Reserve independence, you might never end up pulling a December of 2021 again. And that's where CNN basically argues that you might end up taking that independence away, and in the long term, you could reignite inflation by not responding to an inflationary impetus of the future. And so I half agree with CNN here, and I half agree with Donald Trump. I actually think Donald Trump would be right to mitigate the damage of this recession that the Federal Reserve is brewing. They're already behind the curve. So I think Donald Trump would be right to beat up the Fed and threaten to fire Jerome Powell, or even do it if he needs to help prevent the odds of a recession and support the American economy. It's going to need it over the next year. I'm highly confident of that. Obviously, I could be wrong. That said, in the future, you would want to bring that independence back to make sure you do have a Fed that is willing to take the punch bowl away, do a December of 2021 when it becomes necessary to do so. I don't know how easy it would be to be able to switch back to that. So there you go. Could Powell get fired? Absolutely. Is Donald Trump's threat of firing Powell probably a good thing for the economy? Yes. But it's only going to happen once the economy starts really showing more severe and sustained cracks. If you look at interest rate swaps, this gets a little arcane. But if, for example, you go to the 5-year swap spread on SOFR, you're going to see on a chart that they're going vastly negative, heavily negative. Like, these spreads are usually a sign of markets suggesting there's some kind of tumult coming. And when you look at spreads, they've basically been going straight down since 2020. We had lows in the summer of 2022, like July 19th of 22. That's when House Hack was founded, like at the bottom of that stock market in 2022. That was crazy. And then you also had some pain at the end of 2023, which is also when you had swap spreads as or nearly as negative as they are now, but they've fallen off a cliff and gone even more negative, which is a sign that markets think over the longer term, in this case the 5-year spread or the 10-year spread, interest rates will end up going lower. Markets are just mispricing that right now. Why? We don't know. Is it because a recession's coming or there's some other mistake? I guess we'll find out. Anyway, if you found this useful, consider subscribing to the channel. Get your free alpha report at meetkevin.com/alpha. And folks, we'll see you in the next one. Thanks so much and goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.